World Economic Forum in Davos enters third day, where Nigeria joins others to fight plastic pollution. IMF projects 5.5% global GDP growth in 2021. CBN Monetary Policy Committee retains monetary policy rate at 11.5% as oil stays resilient despite COVID-19. This is Business Express reaching you from Abuja, Nigeria's capital. My name is Musa Abubakar. Thank you for joining us. The International Monetary Fund (IMF) projects global economy to grow by 5.5% in 2021 and 4.2% in 2022. The 2021 forecast is revised up 0.3 percentage point relative to the previous forecast, reflecting expectations of a vaccine-powered strengthening of activity later in the year and additional policy support in few large economies. The IMF outlook says that although recent vaccine approvals have raised hopes of turnaround in the pandemic later this year, renewed waves and new variants of the virus pose concerns for the outlook. The global growth contraction for 2020 is estimated at minus 3.5%, 0.9 percentage point higher than projected in the previous forecast. The strength of the recovery is projected to vary significantly across countries, depending on access to medical interventions, effectiveness of policy support, exposure to cross-country spillovers, and structural characteristics entering the crisis. Meanwhile, the Central Bank of Nigeria has, at the end of its first Monetary Policy Committee meeting for the year, resolved to intensify efforts at providing targeted credit facility to sectors hit by the impact of COVID-19 and encourage government not to consider lockdown of the Nigerian economy. With a mandate to regulate price and monetary stability as well as exchange rate stability, the CBN says amid rising inflation, policies targeted towards improving the flow of credit to the real sectors of the economy will be pursued in the new year to quicken recovery. Central Bank Governor Godwin Emefiele renewed commitment to supporting the export sector with finances at concessionary rate while extending the 5% interest rate on the bank's interventions.
This should be central bank's contribution to ensure that interest rate, particularly for interventions, which are targeted to other households, SMEs, agri, health sector, pharmaceuticals, agri and manufacturing, that will stimulate consumer spending and increase manufacturing output, that we need to support it. We will continue to do so.
The MPC retained the benchmark interest rate at 11.5%, while the asymmetric corridor of plus 100 and minus 700 basis points around the monetary policy rate remains. The cash reserve ratio at 27.5% and the liquidity ratio at 30% was also retained. We have Ayodeji Ebo, senior economist and head of research and strategy, Greenwich Merchant Bank, for his opinions on the MPC's decisions and the economy. He joins us on Zoom from Lagos. Hello, Mr. Ebo. Glad to have you join us on the program.
Yeah, good afternoon. Thanks for having me.
Okay, second wave of COVID-19 is with us here in Nigeria. Then there is the security situation in the country. Inflation is still high. These factors, do you think they were really considered in keeping the rates?
Yes, thank you. I think the Monetary Policy Committee they were very considerate, and because if you look at the yield environment, if not for the fragile growth or the challenges within the economy, the MPC would have increased the rates. But to further support the growth in the economy to ensure that we get out of the recession faster than anticipated, the community decided to keep the rates at current level at MPR at 11.5%. Yes, we're going through a lot of challenges which you have highlighted. Uh, Starting from the insecurity issues, you would also agree, you would agree with me that this is very cogent that we need to find a way to resolve this. But beyond that, the second wave of COVID-19, and which is currently staring at us in the face, and the committee made a very loud statement trying to advise government that a major lockdown would just set us back. That will not solve our problem, which we feel it's very germane, and it's critical that government understands that locking up the economy would further put Nigerians into deeper poverty.
Okay, the MPC dwells on the CBN's efforts to encourage lending by deposit money banks. Should we expect more lending to the real sector in first quarter 2021 and into the year?
Yeah, I think what we think is that we believe as the coast come more clearer, as the risk environment improves, that's the insecurity environment, as that improves, before we begin to see that significant lending into the real sector. The banks, it's a private business, and they are in that business to ensure that the return on equity, return to shareholders is meaningful. So we don't expect that uh, we would see any significant increase in lending, just because there's a need for it now. The economy is struggling, and most of the businesses are still faced with a lot of challenges, structural issues that needs to be resolved. For most of the companies, they need to they provide their power, they provide their distribution channels, and as a result, they are not very competitive. And those are some of those factors that the banks will also consider before they begin to channel funds into the real sector.
Okay. The CBN is concerned about insecurity. How important is this worry in the scheme of things?
Thanks for that question. Insecurity plays a major role in investment. So for her, when you look at even for the federal government, there's a revenue challenge, and we need the partnership. We need more partnership or collaboration with foreign investors to invest in the country. And if we don't tackle the issue of insecurity, it would impact, it has a way, it will impact on the foreign direct investment that will flow into the country. If we also want to look at it from this perspective of how it also impacts on food, uh, we can see how food prices have increased significantly, aside the land border closure that impacted on prices of food items. Also, insecurity is also a major factor that played a role in that is playing a role in this rise in food prices. So it's important that we tackle the insecurity problem. At least just yesterday, the president announced the new service chief, and we were hoping that there will be new strategy that will be adopted to tame the insecurity challenges that is rubbing us in the face, and it's also sidelining us from enjoying some of the inflows in terms of investments that we would enjoy.
Okay. The stimulus packages seems not to be enough to stem down inflation. Why so?
Yeah, I think we need to first recognize that Nigeria was still struggling. We've not fully recovered from the recession before the COVID-19 pandemic also came in. So even for the government, we know once there's a problem with oil price, it impacts on the ability of government to implement. So what we saw, it's more of the support from the CBN, which the CBN governor put yesterday about less than 5% of GDP, which we know, which is um, very little compared to what other countries, like of the developed countries, have done, which is as high as even 30-40% of their GDP. So, but CBN has played its role. The fiscal authorities also need to see what can they, if they don't have the fund, can they create their enabling environment to attract these funds from foreign and domestic investors by providing confidence, enforcement of contracts that provides confidence, so that that would.
We sincerely apologize for that audio problem. Thank you, Mr. Ayodeji Ebo, for your contribution. On tax matters, the National Bureau of Statistics has released sectorial distribution of company income tax data for fourth quarter 2020. The data reflects that 295.7 billion naira was generated at company income tax CIT in fourth quarter 2020 as against 416.01 billion naira generated in third quarter 2020 and 362.01 billion naira generated in fourth quarter 2019. Professional services, including telecoms, generated the highest amount of company income tax with 32.17 billion naira generated, and closely followed by other manufacturing generating 25.64 billion naira, commercial and trading generating 19.41 billion naira, while textile and garment industry generated the least and closely followed by mining and local government councils. Out of the total amount generated in fourth quarter 2020, 162 billion naira was generated as CIT locally, while 63.52 billion naira was generated foreign CIT payment. The balance of 70.20 billion naira was generated as CIT from other payments. In another development, the Federal Ministry of Finance, Budget and National Planning, as well as the Federal Inland Revenue Service, have been directed to commence immediate remittances of funds approved by law to the National Agency for Science and Engineering Infrastructure, NASENI. President Muhammadu Buhari, who is the chairman of the governing board of NASENI, gave the directive while insisting that the agency must be provided adequate financial, human and material resources so that Nigeria can have the benefit of rapid technological development. NASENI was established in 1992 to facilitate, among others, local mass production of standard parts, goods and services required for the nation's technological advancement. On the commodity market, gold prices pulled back after hitting highest levels in 2 weeks. Price movement for gold and other commodities is next. Talking stocks, domestic investors outperformed foreign investors by 7.7 billion naira as total domestic transaction in Nigeria equity market rose to 1.43 trillion naira in 2020. Details of domestic and foreign portfolio participation in equity trading published by Nigeria Stock Exchange shows that total domestic transactions accounted for about 74% of the total transactions carried out in 2020, while 729.21 billion naira worth foreign transactions accounted for about 26% of the total transactions. Analysis of the figures showed that the domestic transactions increased by 46% from 2019 transaction figure of 985.5 billion naira compared to foreign investors transaction decreasing by 22% from 942.55 billion recorded in 2019. Nigerian equities market began the week positive and stayed so as more earnings trickle in on news on retention of lending rate by the Monetary Policy Committee of the CBN. At the close of the trading this Wednesday was a positive close for equities at the end of trade for 27th January. The NSE All-Share Index appreciated by 0.83% to close for 1,930.73 basis points, with market capitalization at 21.9 trillion naira. 534.5 million shares valued at 7.3 billion naira in 6,777 deals exchanged hands at the end of the day's trade. The top most active and sought after stocks were Transcorp, Japan Gold and Zenith Bank. On the global scene, European indices opened in the red while shares in Asia were hurt by some profit taking. Bosede Abel has global market update.
It wasn't a pleasant opening for global stocks Wednesday as most markets were affected by various factors. In Africa, Tunisia's Tunidex, Ghana's GSE Composite and Nairobi's All-Share posted gains. Namibia's overall index and South Africa's JSE Africa Top 40 opened on a negative note. European stocks inched lower early trading Wednesday, echoing an uncertain trend seen in other global markets overnight. The lackluster sentiment in Europe reflects investor uncertainty amid the ongoing coronavirus pandemic. Stocks in Asia were mixed as the International Monetary Fund (IMF) raised its growth forecast for the global economy this year. The Nikkei rose 0.31% to close at 28,635.21. Shanghai Composite advanced 0.11% to 3,573.34, while the Hang Seng Index was above the flat line for its final hour of trading. Futures contracts tied to the major U.S. equity indices were mixed early Wednesday as Wall Street focused over earning results from Microsoft and awaited similar updates from Apple, Facebook and Tesla due out after the closing bell. Bosede Able, Business Express.
The Macro Small and Medium Enterprises Survival Fund Payroll Support Portal will be reopened for states that have not met their quota in the initial stage of the program from 27th of January 2021. Minister of State Industry, Trade and Investment, Mariam Katagun, disclosed this in a statement issued by the Project Delivery Office. The statement noted that Benue, Plateau, Bauchi, Kano, Kaduna, Rivers States and the FCT have met their quota, therefore not eligible to participate. To register, businesses must have CAC registration, a minimum of 10 and a minimum of 50 staff. The scheme provides for 45% female participation and 5% special needs participation. We'll go on a short break now. Business Express continues after. Was the exchange rate of the naira to other major currencies midweek? Here's a look at the currency market. With that, we've come to the end of this edition of Business Express. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now, and the hashtag is BizX. Join us again Thursday at 9:30 a.m. for another episode. I am Musa Abubakar saying please stay safe.